Everyone, Mark here at TapeTally.com for your Week 40 recap. Taking a look at the stats for the first week of October here, we see the market's mostly higher. The only exception here is oil, which was down on the week. Maintaining my ratings for this coming week. Bullish for the U.S. markets, neutral for gold and the Canadian markets, and bearish for the oil markets. Jumping right into the charts here, explain some of my the reasons behind my ratings. So we can see here, on the long-term chart, the market just continues higher. There's really not much you can say for the long-term bearish, I guess. It could be running into a bit of resistance from 2008, but that's a long time ago. And I don't think investors, a lot of investors that were here, maybe bought here, suffered through all of this and now are willing to sell at break even. I just don't see that happening. And there may be, a slight bit of resistance there, but I don't think it's going to be much if we continue to march higher here. So you can see that that's not true for the Nasdaq. I believe these are at like 11 multi-decade highs or something. So this continues to march higher. IWM broke out of this pennant pattern here. It's pausing here after the breakout, which is healthy. We'll see how that works out. Dow Jones Industrial Average still in this range here. Taking a look at gold, I am neutral on gold. I do want to get bullish on it. However, I just want to see a bit more consolidation, maybe some downward movement here to refresh the trend. But I don't mind this chart for a bull move here. Looking at oil, I mean, it maintains its bearish rating in my mind. Just with this, like, I know we had a large up week a few weeks ago here, and everybody was kind of getting excited about gold. But I mean, this has been dead for years, and I continue to think that it will be dead until I see some movement above this trend line here. Now, somebody asked me why, if I'm so bullish on the U.S. markets, why I am not also as bullish on the Canadian markets. And actually, oil is one of the main reasons. I don't mind this chart. It's consolidating nicely here, but I want to see oil move higher. The Canadian markets are a resource-based economy, so a lot of it, and if you notice, like the underperformance here, it's only up 8.5% this year while the U.S. markets are up much higher, and that's mainly due to this this bearish year-to-date return on oil. So really, for the time being, I don't see anything that is bearish. The bull trends remain intact. Let's take a look at the daily chart here. Daily, it remains in this channel. We could see some weakness. Like if you notice, let me draw some lines on here. We could be kind of setting up here for this topping pattern here. I mean, there's many names for it. As we saw at the beginning of the year, sort of this topping pattern where we had a larger correction in the market. We could be, I guess, sort of seeing that. You kind of want to see both sides of the market here. We could be seeing that topping pattern there, but I think that's a very low percentage play if you wanted to play that one. What else? Let's take a look at. I guess let's take a look at something that I do to prepare myself for the upcoming week. Pull up the header right here. There it is. This is a site that I go to quite often, especially before the market opens each day. I take a look at what the economic news is happening. I don't really care. I don't know what happens inside any of these, but I know that they are market movers. A lot of these. I think the yellow ones are merit extra attention, and the red stars are typically market movers. So there's international trade and jobless claims and PPI and the consumer sentiment. These are all kind of important things that I will look at. So yeah, I just wanted to share that, and hopefully you find some use out of that. Have a great week and trade well.